Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news of the size of the risk to global financial stability from the Chinese SOE system. But first, American business spending on equipment appeared to have remained slow in September. Military spending held up the data. And the goods trade deficit widened further as rising imports outpaced exports. US economic growth has clearly moderated in the third quarter. Pending home sales were also weak, with this September measure down 1% from the same month a year ago. Only in the south is this metric higher than a year ago. A lack of inventory of moderately priced homes and rising interest rates affecting affordability are the factors restraining the US housing market. Across the Atlantic, in holding its official settings unchanged, the ECB acknowledged that the Eurozone's economic growth momentum has weakened, but it confirmed it would press ahead with plans to phase out its QE policies this year. This will be particularly hard for Italy, which has been counting on monetary stimulus after it's been blocked from fiscal stimulus. Despite all this tame economic news, Wall Street is higher today, recovering all of yesterday's losses, although no more than that. Shanghai finished yesterday unchanged, a rare day of no losses for them. In China, their government has for the first time tallied its total financial assets across its spreading network of thousands of state-owned companies, warning in a report of poor management, bad planning, and the urgent need for a system to provide legal accountability and supervision. The scale of these assets is impressive. They're worth more than $35 trillion, or about the equivalent of half the world's annual GDP. There is huge global systemic risk in such a poorly managed system. In Australia, insurer QBE, who has a big business with lenders' mortgage insurance, sees continuing falls in house prices in New South Wales, Victoria and Queensland until at least 2021. But the scale of these declines are not large, according to their analysis. And surging corporate and personal tax collections have lifted the Australian federal budget into balance for the first time in a decade, as their coffers are boosted by both healthy global and domestic economies. US Treasury 10-year yield will start today at 3.14% and marginally firmer from this time yesterday, with their 2-10 curve still under 27 basis points. The other yields we follow include the Aussie government 10-year, which is at 2.63% and down 3 basis points, the Chinese government 10-year, which is at 3.57% and unchanged, while the New Zealand government 10-year is at 2.59% and down 7 basis points. Swap rates have moved lower yesterday too and flattened. In fact, our 2-10 curve is now at its flattest since November 2016. And gold is at $1,229 an ounce, up $2 from this time yesterday. Oil prices have stayed down today and are holding at a 6-week low. US oil prices are just under $67.50 a barrel, while the Brent benchmark is just over $76.50 a barrel. And the Kiwi dollar will start today unchanged at 65.2 US cents. On the cross rates, we're at 92.1 Aussie cents and 57.3 Euro cents. That leaves the TWI at 69.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.